That's closing bell on Wall Street, and now it's market domination overtime. We're giving you full coverage of all the moves to get you up to speed on the action from today's trade. And Yahoo Finance's Jared Blikre joining us now with the latest market action. Jared.
Thank you, Josh. Let's take a look at the Dow first. It is leading the majors up 1.43%. It has been green just about the entire day with a little bit of red in the opening 30 minutes there. But check out the last 3 trading days. This is up 3% now. And in the Nasdaq, check this out, almost 4 1/3% over these 3 days. And then the S&P 500 a little bit less than that. But it's really the small caps that have just knocked it out of the park since last Friday, up 7%. So that's a Russell 2000 that you're looking at right there. And let's check out the sector action. Guess what? Healthcare has been the quiet force in this market this fourth quarter. So since October 4th, it has been leading by a large amount. Today, it was a leader again. XLV up 2.25 percentage points. XLY is consumer discretionary. That was also up over 2%. Then you got materials, consumer staples, industrials, financials, communication services. All 7 of those sectors are outperforming the S&P 500. The only losses we saw today were in the energy sector and in utilities. Tech, by the way, just barely holding on to some gains today. Not the greatest day for tech. And a lot of that has to do with Nvidia. You can see the biggest stock in the solar system down about 2.5% there. Alphabet, another record high, up 1.53%. And let's get a view on the market cap. 3.917, so let's just call that $8 billion away from that cool $4 trillion mark that we've been tracking here. Meanwhile, we got Broadcom up almost 2%, Meta up almost 4%, so pretty good day for these stocks overall. And let's drill into the tech sector. Here are the semiconductors. I said it wasn't the best day for them. Nvidia was a loser, but AMD a little bit bigger loss there, down 4% in the upper right. However, you did see Applied Materials, I'm circling here, up about 5%, and Analog Digital, that was also up about 5%. In terms of software, much better day there, much better showing for the software part of the tech sector. Looks like CRM, Salesforce up over 3%, so is Workday. Zoom up almost 10%. I believe that's after earnings. A lot of outperformers here, so I'm not going to tick through all of them. Just want to quickly look at our risk basket. That would be the meme stocks, and looking pretty green there. And in fact, if I put that on a 3-day view, you're going to see a lot of dark green. So it has definitely been risk on with a skew towards some of the smaller names, some of the fringier names since last Friday. Josh.
All right, thank you, Jared. Appreciate it. Well, investors continuing to digest market volatility ahead of the Fed's December FOMC meeting, but our next guest says the rate environment and consumer resilience could set up for a solid year for small caps and financials. For more, we're bringing in now Jason Barsema, co-founder and president at Halo Investing. Jason, it is great to see you. So let's start on the Fed, Jason. Big meeting next month, of course. Increasing odds that they cut. You raised the possibility here, Jason, of a tie vote, which is interesting. How come, Jason? And what would that mean for the markets?
Well, I don't think any of us would know what that ultimately means because we've never seen it before, Josh. But it could be a tie ultimately. And if you look at the Fed board right now, it's relatively split, although I think the market is showing you that ultimately the Fed is probably going to cut by 25 basis points or so. But interesting nonetheless. I think after the data that we saw this morning, Josh, in regards to consumer confidence, spending, PPI, all signs point to a cut. But cuts are good, and I think that ultimately benefit the market in 2026.
You also talk about this sort of broadening, Jason, of the market, both on the upside and the downside. What does that signal to you, Jason, and where we could be headed from here, and maybe where the next leg of the rally could be?
Yeah, I think that that's good. As you and your former guests were just talking about, you're seeing a lot of the atypical names start to rally, especially in nice days like today and that we've seen over the last 3 days. And I think that that's really important. We've seen this concentration in 10 names for the last couple years now. And to be able to get that next leg up, we needed a little bit of a pullback. I still think there's probably more volatility to come over the course of the next couple months. But as you see that market broaden out, people are going to be more willing to come in and have that confidence to come in, as there's still a record amount of cash that's in retail money market funds. So we have to remember just the amount of liquidity that's on the sideline. And with monetary policy changing, fiscal policy obviously coming in with potentially more savings or spending, that could bode really well for the market in 26. What you want to be able to look at is what are those sectors that ultimately are the most exposed or benefit from lower interest rates and more spending. Small caps obviously have lagged the performance of large caps over the last few years, and candidly looking back a lot longer than that. I think given valuations in small caps and lower interest rates, that could be a really interesting exposure and ultimately sector for investors to look at in 26.
What about financials? I see those are on your radar as well here, Jason. You highlight momentum in M&A, IPOs, debt financing. How much of that, though, do you think is perhaps already priced in here?
Well, I think if you looked at the performance of financials over the last few years, it's not fully priced in yet. And with some of the new relaxation around SLR rules for the bigger banks, that could bode really well by being able to free up capital for these big banks to be able to deploy into other assets, lending activities, et cetera, et cetera. So, the market yet, in my opinion, is not really appreciating the fact of what this amount of capital from SLR and other policy measures will do for the larger financial names. But it all comes around interest rates, and you haven't seen the activity in IPOs and M&A that we saw 5-6 years ago. When you look at pipelines that are being talked about from the banks and even from insurance companies, I think we're going to see a lot of that type of IPO/large M&A activity in 26 and 27. Certainly, this is an administration that is very positive and constructive on M&A activity. So, I feel from a valuation perspective, that's an industry to look at.
Finally, just in terms of the great AI trade, some of the divergences we've seen recently over the past month, Alphabet's working, Nvidia isn't, Meta and Oracle getting whacked. In your opinion, is there something fundamentally shifting here? I've seen some commentary, they'll say this is investors actually drawing some harder lines in the sand about ROI and who's going to get to that ROI fastest. Other analysts have been on the show and say, listen, they don't see that at all. They see this is just sentiment. That's all it is, momentum. But I'm curious what you make of it.
Yeah, I think ultimately you have to look at the companies, and I don't talk about individual stocks, but when you look at Google, Oracle, Meta, et cetera, just the amount of debt that they're issuing to be able to finance these data center projects and the AI boom in general is astronomical and going to continue to grow. I mean, if you look at what people are projecting that we're going to spend on data centers alone, it's roughly $5 trillion over the course of the next 5 years. And I think that that's on the low end. I think it's going to be much, much higher just with the amount of eye-popping numbers that you've been hearing from a lot of these different companies. One of your previous guests was talking about the issues that we have from a supply perspective in regards to energy. And I certainly agree with that. I think when you look at as far as he was looking out at from a 2040 perspective, I think that these models are going to be a lot more efficient and probably not consume as much power as they do today. But you hit the nail on the head, Josh, of the ROI on the AI, right? 90% in the latest survey that I read of individuals who utilize AI say that they haven't been receiving any return on investment in regards to AI. I think you're ultimately going to see that. AI is here to stay. We utilize it at Halo very successfully. We do see the ROI in regards to the processes that we've adopted AI within. And you're at the early stages of this. This is not 99 and 2000, in my opinion, because you have real companies with real business models with real cash flows. And ultimately, there's a real application for AI. So I like that sector and I like that trend in 2026. Just consider barbelling it with other sectors that have been more out of favor, like small caps and financials.
All right, Jason, great to see you. Appreciate your time, sir.
Yeah, thanks, Josh. Happy Thanksgiving.
You too. Turning now to Dell, as its third quarter results are hitting the wire. You can see the stocks popping about 2% here in the after hours. Q3 adjusted EPS $2.59. That's versus an estimate of $2.47. Q3 total net revenue clocking in at $27.01 billion. The street there had been looking for closer to $27.19 billion. I'm just looking ahead now. Q4 adjusted EPS midpoint $3.50. The street was at $3.23. And Q4 revenue I'm looking for as well here. There it is, $31 billion to $32 billion. Estimate was closer to $27.64 billion. And looking ahead now, full year adjusted EPS midpoint $9.92. They had seen $9.55 and the estimate was $9.55. And the full year revenue, they're now calling for, it looks like, between 111.2 billion to 112.2 billion. They had seen 105 billion, and they had seen 105 billion to 109 billion. So they are raising that annual outlook, and it looks like for shipments of AI servers. And of course, that's going to be a big focus for this company. More color and commentary about that AI server business. It's what's going to be a focus on that call. Just what the company's seeing there in terms of shipments and backlogs, and very importantly, margins. PCs will be in focus as well in terms of consumer, commercial, what they see ahead. You know, the stock was interesting on this one, and heading into the print, it was up roughly 10% this year, but it was down about 20% over the past month. We had seen some downbeat commentary from the street, including Morgan Stanley had a big note, remember. They downgraded Dell recently. They were talking about rising memory chip prices, the concern there, of course, being higher costs and how that would pressure margins. Most on the street, though, more than 75% of analysts, in fact, still say Dell is a buy here. The average target is around 164. At least initially, the stock's popping around 2% in the after hours off of that print. Dell reporting a beat on earnings for the third quarter. The company also lifting its full year revenue outlook and its AI shipment guidance. Joining me now to discuss is Technalysis Research President Bob O'Donnell. Bob, great to see you, my friend, as always. So Dell just reported, Bob, it looks like they do raise their annual outlook for shipments of those AI servers we know investors are so focused on. Looks like the operating margin, Bob, in Dell's infrastructure unit, which would include the servers, 12.4. It looks like consensus was actually closer to 11.2. But give me the Bob O'Donnell take. What do you make of this print?
Well, first of all, Josh, thanks for having me as always. Look, I mean, Dell was the first to embrace the Jensen's idea of the enterprise AI factory, which basically means GPU-equipped servers to be run locally within companies. And this phenomenon is something that has been slowly starting to build, and now we're really starting to see it take off. And yeah, quickly glancing through what Dell had to say, they saw it this quarter, they're predicting it for their full fiscal year and into 26 as well, because what a lot of people are realizing, and I just did some research on this myself, you know, that running AI workloads in the cloud can be very expensive. So, and a lot of the most important data that companies have is still on-prem on the data center. So this is a fantastic opportunity for companies like Dell, HPE, not Inc., but E also, and companies like Cisco and others, and Lenovo, who sell these servers to the enterprise. Dell also, of course, sells to the neo clouds and some of these other companies that are benefiting from this. So interesting to see. Also, the PC numbers, pretty decent, actually. Commercial PC in particular continues to be a strong point. Windows 11 refresh, thanks to the end of support for Windows 10, are also a factor there. So, you know, you got a couple of nice pieces. Now, challenges are going to be DRAM and NAND pricing for storage. Those are big factors. That's going to impact HP Inc. as well, which we'll get to hopefully shortly here. But bottom line is, you know, that story of companies actually doing some of this AI work on their own, this hybrid AI model, I call it, where you use the cloud as well as your own data center. Oh, by the way, as well as AI PCs, becomes very interesting.
A point you touched on there, Bob, I just want to double back on, because you know the stock had been, for Dell, it was up about roughly 10% this year. It was down about 20% over the past month, Bob, heading into this print. There had been some commentary on the street. Morgan Stanley, and this was a big downgrade that made headlines, they downgraded Dell, and they were talking in that note, Bob, about a point you just made. They were citing these rising memory chip prices and the concern there being higher costs, pressuring margins. How should we think about that as investors?
Well, it's going to be the case, right? I mean, the prices are increasing for everybody across the board for DRAM, for NAND. And, you know, if you're making a PC, you're making a server, you got to have that stuff. So all of those things are going to be factors. They're likely going to hit margins. But the bottom line is that demand is still there. I'm not sure they're going to hit, you know, if they hit the margins a little bit, I don't think it's going to crush demand. I think you'll still see strong demand overall. And I think that in the long run is going to benefit both Dell and HP for these kinds of, for the devices, as well as in particular for Dell for the servers.
Dell does compete against, of course, Bob, some big, well-established names and players, right? I mean, it's HP Inc., it's HPE, Supermicro, increasingly Cisco. How has that competitive landscape been shifting, Bob? What are some of Dell's just competitive advantages?
Well, I think, look, Dell, as I mentioned briefly earlier, Dell early on saw the opportunity for AI in the enterprise, and they created some of the first reference designs along with Nvidia. They announced it almost like 2 years ago. They were way ahead of the game in terms of what was happening. And at a GTC, I was at a GTC where Jensen specifically called out Michael Dell sitting out in the audience and about the partnership they've had there. So that combination has really set up Dell, I think, very nicely for quite some time. And, we're seeing build on that. And they're continuing to build out on that commercial PC story that they've had there. The AI PC has not exactly taken the world on fire as a lot of us hoped that it would, but it's now starting to have an impact. And we're going to see that in the enterprise. Again, research I just did talked about how much people expect AI PCs to be important for companies. So we're going to see benefits from Dell because they've been designing these systems. They just came out with a new one that actually has a Qualcomm accelerator, very interesting new PC that they just came out with. But bottom line is, look, they've set themselves up to take advantage of this refresh we're seeing, particularly in enterprise data centers. Everybody is not going to the cloud for everything. There is this opportunity within the enterprise.
I was talking briefly, Bob, I was talking to another well-known tech analyst. He saw Dell as increasingly, he said, perhaps a Cisco alternative. What he meant by that is just sort of a kind of one-stop shop for enterprise IT and services. Do you agree with that framing?
No, it's an excellent point. And, we saw, again, quickly looking at the numbers, the storage was down a bit, but their networking business and their services businesses were very strong. So you're right. And I've met recently with the Dell services folks, and they have a very interesting approach to the way they're trying to come at these companies. Again, Dell recognized early on, I give them a lot of credit for recognizing the challenges associated with first deploying this technology. They created these educational materials that they are using. They found out their own customers didn't understand a lot of this stuff. They're taking the stuff they created for their own employees and bringing it to their customers. And that idea and the blueprints that they've started to create, from eating their own dog food, drinking their own champagne, whatever you want to call it, they're using those ideas with their customers. And that becomes a very interesting opportunity for them.
Finally, I do want to get your take here on HP Inc. before I let you go, Bob. Different story for HP Inc. They report the stock, at least initially, was down here in the after hours. Looks like they offered investors a profit outlook for the current year that does miss estimates here, Bob. It looks like profit for the year, X items like restructuring charges, it's going to be about $290 to $320 a share. It looks like analysts per Bloomberg had expected something closer to $332. They also say they're going to be cutting, Bob, somewhere between 4,000 and 6,000 employees through fiscal 28, using, it sounds like, more AI tools. You're just kind of instant reaction to that print, Bob?
Well, my instant reaction, I'm curious about the consumer versus commercial side of things. Again, I think commercial PC continues to be a strong opportunity. With HP, look, they've got a printing business. Everybody knows the printing business is slowly but surely kind of going away. But supplies are still a big part of that business to existing customers. So even if they're not selling a ton of printers, they're selling the supplies. And HP has done a really good job on the consumer PC side in terms of their global presence. They really have a strong consumer PC brand around the world. The share of consumer PC is higher for HP than it is for Dell, so they've been able to benefit from some of that. So, look, yeah, I think there's going to be some challenges. A lot of companies are taking this idea of using AI to get more productive, and based on your last conversation right before I came on, that ROI story is going to start to appear for AI. HP Inc. being an example of a company that's going to try and take advantage of it to reduce those costs. And again, I think AI PCs are a great opportunity for HP, just as they are for Dell, but they also face those DRAM and storage extra charges.
Bob, as always, sir, appreciate your time and that analysis. Thank you.
Thanks, Josh.
Well, HP Inc. earnings just crossed the wire. The company topping estimates in its fourth quarter, announcing it will cut 4,000 to 6,000 jobs by 2028. Yahoo Finance executive editor Brian Sozzi has more.
All right, 'tis the holiday season. That means potentially a new computer or a new printer under that tree. To that end, let's bring in HP CEO Enrique Lores, fresh off his earnings release. Enrique, happy holidays to you and yours. Good to see you as always. Your biggest takeaway for this quarter?
First of all, thank you for having me here. And as you said, holidays are coming. Why not both, a PC and a printer under the tree? But let me go to Q4. We had a strong Q4. The company grew for the 6th consecutive quarter. We also closed the year with positive growth, and we end the year with good momentum, especially in the PC side, both in commercial and also in the consumer side. So it was a good quarter, Brian.
There is, I don't know, I'm going to call it a crisis, because that is what other people are calling it in the industry. This memory chip crisis. There's so much demand for all things AI. It's causing shortages in chips. Prices are going up. You know, I was reading some research from Counterpoint Research. Memory chip prices up 30% expected in the fourth quarter. Another potential 20% increase next year. What is happening out there, and how are you responding?
Well, first of all, you summarized it well. There is a lot of demand for memory driven by the data center expansion, and this is created both shortages and also memory price increases. From a supply perspective, given our scale, the relationships we have, the contracts that we have, we are in a good position, but we expect memory prices to increase, and they will mostly have an impact in the second half of the year. In the first half, we are well protected given the inventories on hand that we have, but we expect to see an impact on cost on the second half that we will mitigate both by redesigning our portfolio, lowering memory configuration, looking for additional suppliers, and eventually also increasing prices given the magnitude of the cost that we are expecting.
Yeah, Enrique, I mean, these are serious increases. I mean, how much could a PC go up because of higher memory prices?
Well, we have shared in the call that memories represent between 15 and 18% of the cost of the PC. So you can calculate that the price increases could be significant in the second half if we need to mitigate all through price. But again, we are taking other actions to try to protect demand and try to protect our consumers.
I'm not going to pretend, Enrique, that I work at a Best Buy and I'm a computer geek and I know enough about computers. I know when I press the power, Enrique, it goes on and allows me to do my work. But how do you just mentioned it, how do you redesign a computer or a printer to keep it a profitable thing when memory prices are going up? What do you have to do?
Well, we have a very broad portfolio, and what we need to do is make sure that customers buy the right portfolio for their configuration. And this is something that in the commercial side for our B2B customers, we enable with our workforce experience platform. We have tons of data that we have captured with telemetry, and this is a tool that enables CIOs to monitor what is the performance for the individual customers. So they can really optimize what memory they have, given the work that their employees will be doing, and is the perfect tool for this type of environments where CIOs will have to optimize how much memory they deploy, what configurations they deploy, and we really think this can be a very useful tool for them.
From your vantage point, even looking at it from a memory perspective, the AI build out in the United States and even more broadly around the world, does it feel too overheated to you?
I think that in the medium and long term, it is very clear that AI is going to have a very significant impact in how all of us work. And if I think about the different activities that we do in the company, we really think that this is going to be transformational. So from that perspective, medium, long term, I think that we are going to see a huge impact from AI in every activity around us.
You and I have talked a lot in the past, really the past year, about the AI PC. I mean, that time is now. What are some of the clear benefits you see from these AI PCs compared to a prior generation?
Yeah, so first of all, let me share that in Q4, the mix of AI PCs was above 30%, and our original plan when we started on this more than a year ago was 25%. So adoption is going faster than we were expecting. And there are multiple benefits, from purely, I would say, hardware-oriented benefits because they have longer battery life. They are more secure because we can build security techniques that we cannot build in other PCs. We are starting to see many ISVs, many software companies taking advantage of the capabilities that these PCs have. And this can be used to process data faster and to really, if companies use the capabilities on the PCs, many of the inferencing will be faster because will be done locally. We also see other companies taking advantage of the capabilities to improve security. For example, CrowdStrike has been taking advantage of that and building specific security features for AI PCs. So we see a lot of momentum with different software companies taking advantage of that. And we think this is just the beginning of a big transformation that will happen because by processing locally, it is more secure, it is cheaper, and it's faster. So these are the three core advantages of AI PCs.